Am I audible? Good morning, students. Welcome you all once again in the live virtually revisionary classes of Board of Studies, organized by Board of Studies of ICAI. Students, today we are going to revise a very important topic in the practical life as well as from the exam perspective, which is Ind AS 115 revenue from contract with the customers. So, students, while discussing this topic, so we discussed this topic at length in our full videos, in our full classes. So in next 3 hours, we are going to revise this topic, right? So I have few complex questions, few detailed questions on Ind AS 115. So I will talk about few concepts and then I will solve those questions so that you will be able to understand that how the big and complex question has to be solved in the examination, right? So friends, let's quickly revise this Ind AS 115 from the topic perspective. Ind AS 115 revenue from contracts with the customers. Friends, this standard talks about revenue. What is a revenue? Revenue is an income. Revenue is an income arising in the ordinary course of the entity. For example, Ambuja Cements Limited. So the ordinary course of the business of Ambuja Cement Limited is to manufacture and sell cements. So whatever Ambuja is generating from selling of cement is a revenue. But let's say Ambuja Cements deposited surplus money into fixed deposits, in mutual funds, in buying the shares of another companies. So if Ambuja is earning an interest or dividend, it is not a revenue. It is not arising in the ordinary course of the entity. It is not an ordinary course of business, right? It is not a bread and butter of the Ambuja. It is other income. It is gains. Okay. So friends, this standard talks about revenue, okay? And revenue is an income arising in the ordinary course of the entity, ordinary course of business of the entity, right? Then contract. What is a contract? Contract could be oral, it could be written, it could be express, it could be implied, right? Contract is an agreement enforceable at law. Then there's a customer word which is used here. Who is a customer? Customer is a person or an entity, right? Customer is a person or an entity who buys goods and services, which are provided or produced in as a ordinary course of business of that entity, right? In exchange for a consideration. Means who is a customer, a person or entity who is buying goods and services. Which goods and services? Those goods and services which are manufactured, produced, or provided in the ordinary course of that entity, right? And this customer pays the consideration. This customer pays the consideration. Okay. Three keywords are there: revenue, then contract, and the customer. Friends, the heart of the standard, if I talk about this standard, the heart of the standard is, the heart of the standard is five-step model. Five-step model is the heart of the standard. And all the answers of any question regarding the revenue recognition and measurement has been answered by this five-step model. What is this five-step model? Friends, the first step, identify whether it is a contract with the customer. Okay. Identify, is it a contract with the customer, my dear friends? While you know whether it is a contract or it is not a contract, contract could be express, oral, written, you know everything, right? What is the important aspect in the first step, identification of contract with the customer? The first aspect is revenue has to be recognized. So one important aspect in this first step is revenue has to be recognized to the extent collection is probable, to the extent there is a probability of collection is certain, right? So collectability criteria will be established. If collectability criteria will be established, you can say that yes, we can recognize our revenue now. Okay. So what is the first criteria? Very, very, very important, my dear friends. In question, the question will tell you that ABC Limited is entering into a new market. They are operating into a new market, right? And they have sold goods and services for rupees 10 lakhs, but they are quite sure or they are, only they will be able to collect 6 lakh rupee only, right? So it seems that they will be able to collect 6 lakh rupee only. So in that case, what you will do? In that case, you have to recognize only 6 lakh rupee, not 100%, not 10 lakh rupee. Okay. So the probability criteria has to be there. What is the probability criteria? So it is probable that entity will collect the consideration it is entitled in exchange for the transfer of goods and services. It is probable that the entity will collect the consideration. Means if the goods and services provided is for 10 lakh rupee, but only probability of collection is 6 lakh rupee, you have to recognize 6 lakh rupee. Sir, what happen if tomorrow the customer pays me 8 lakh rupee? So then 2 lakh rupee additional revenue has to be recognized. Okay. Sir, what happens if the customer will not pay 6 lakh rupee? He will pay only 5 lakh rupee. Then you have to create a provision for doubtful debt, bad debt. Okay. Then friends, we discussed, after first we discussed performance obligation, right? So identify the performance obligation, determine the performance obligation, right? How many promises are there in this contract, right? How many promises are there in this contract? Okay. So performance obligation, my dear friends, in performance obligation, we discussed the goods and services has to be distinct. Okay. Different. The goods and services has to be distinct. Distinct means it can give you a different benefit. It can give you a benefit separately. Okay. For example, I am a company, okay, and I have purchased five same mobile phone from Samsung, same model, same price, everything is same, right? But tell me whether these five mobile phones are distinct or five mobile phones are not distinct. These five mobile phones are distinct, okay? Five different people can use they can use these mobile phone at the same time separately. Okay. So distinct means every mobile phone can be used by a single person. Okay. Distinct doesn't mean it has to be, it has to be different features, different characteristics. No. Distinct means the goods and service has to be separate. Okay. So number one, the goods and services has to be distinct. Okay. Goods and services has to be distinct at its own, at goods and services level, and the goods and services are separately identifiable in the contract also. What is meant by separately identifiable in the contract? We discussed the goods and services are considered as separately identified in the contract if there should not be a significant integration, there should not be a significant modification, the activity should not be highly interdependent. Okay. Right? So friends, goods and services has to be distinct at a goods and services level and at a contract level also. What we are doing right now, we are doing a revision. The detailed Ind AS 115 lecture is available in 5 or 6 classes. Okay. Okay. Yes. Friends, then we discussed the concept of right of return, right to return. When goods and services are sold with a right to return, then how the accounting treatment has to happen. Right to return means, for example, the entity has sold 1 lakh quantity of goods. Okay. And there is a 30 days return policy. 30 days return policy. And let's say the entity has sold goods, which is 1 lakh quantity on 15th of March. And there is a 30 days return policy, which will be expiring on 15th of April. But now the entity has to close the books of accounts on 31st of March. Friends, while closing the books of accounts on 31st of March, please tell me whether entity will not recognize any revenue. Whether entity will not recognize any revenue because 30 days period has not been expired. Answer is no. The entity has to recognize revenue. The entity has to estimate as per the past precedent, as per the best estimate and judgment, what is the probability of return? Means if I have sold 1 lakh goods to 1 lakh customer, whether every customer will come and return? Answer is no. Probably few will not be able to come. Probably few will forget the 30 days period and few will enjoy the goods. Okay. So for example, the entity estimate that only 10% people will return the goods. So for 10%, you have to create a refund liability and you have to create a right to recover asset. Friends, we will discuss this concept also, okay? Right of return. This is one of another example. This is one of the concept in the performance obligation, right? So friends, then we discussed the option of material right of discount, right? What happens when you are buying goods and services today and the service provider, the seller, the vendor is providing you a right to claim additional discount on the future purchases, to claim additional discount on the future purchases, so that additional discount right will also considered as a separate performance obligation. We will discuss that part also, my dear friends, okay, while discussing this determination of performance obligation. So these kind of aspect we discussed, right? Then step number 3. Friends, what is my step number 3? Transaction price. What is transaction price? A price which is given while entering into a transaction. Okay. Transaction price. Transaction price is an amount which the entity expect in exchange of transfer of goods and services to the customer, excluding amount collected on behalf of third parties. Right. An entity has sold goods for 1 lakh rupee and there is a 18% GST. The total invoice is 1,18,000. The customer has paid the entity 1,18,000 rupees. Whether 1,18,000 is revenue? Answer is no, excluding amount collected on behalf of third parties. The GST amount of 18,000 has been collected on behalf of the government, right? So revenue is only 1 lakh rupee. Okay. So transaction price includes fixed consideration as well as variable consideration, right? We discussed if there is any incentive, if there is any penalty, right? So at the date of initial recognition of revenue, at the date of initial measurement of revenue, the entity will also estimate the variable consideration on the basis of best estimate and judgment, right? When I say best estimate and judgment means the revenue which is recognized by the entity, the revenue which is recognized by the entity, right? So in the form of variable consideration, so there should not be highly reversal. There should not be high chances of reversal of that revenue. Okay. So variable consideration. Then the second one is significant financing component. Okay, friends, remember we discussed the concept of significant financing component. What is a significant financing component? When there is a difference of more than 12 months between the performance obligation satisfied, means goods and services delivered, versus the amount collected. If there is more than 12 months of difference, then you can say that there is an element of significant financing component which is sitting, and that significant financing component, interest income, that will not be recognized as revenue, that has to be recognized as other income. Okay, friends, we discussed the concept of non-cash consideration also. So I am an entity, I am providing coaching services. Okay. So Rajat is my student. Rajat told, sir, my father has a business of furniture. So first of all, Rajat came and asked me, sir, I want to take a FR class from you. I said, okay, Rajat. So I have given FR classes to Rajat, and Rajat has in return, in exchange for consideration, provided me 2 chairs. Okay. 2 chairs. So friends, it's a non-cash consideration. It's a non-cash consideration. So it's a barter kind of a system, right? So at what value I will recognize my revenue? Okay, at what value I will recognize my revenue, my dear friends? किस वैल्यू पे मैं अपना रेवेन्यू रिकॉग्नाइज करूंगा if there is a non-cash consideration? So friends, non-cash consideration means like barter transaction. So what is the first preference, friends? First of all, if I am selling goods and services, I am selling services to Rajat. Rajat is paying me in terms of chairs, right? So whatever I am receiving, the fair value of goods and received is a consideration for me, right? If Rajat will pay me, if Rajat will pay the money to me, if Rajat will pay the cash to me, at what value I will recognizing the revenue? The fair value of the cash received. And what is the fair value of cash? The same value. So likewise, Rajat is paying the consideration in the form of chairs, furniture. So whatever is the fair value of the chair, that will be a revenue measurement for me. Okay. Second preference is fair value of the goods transferred. If fair value of the goods received cannot be estimated, then you have to go with the fair value of the goods transferred. For example, if I cannot identify what is the fair value of the goods received, okay, then I will go with what I am charging from the customers, from my students. That will become the measurement of revenue. You will ask, sir, tell me one thing. If you are providing a coaching service, you know what you are charging to the student, then why you have not recognized the revenue at that value? Tell me one thing. My coaching fee is, for example, I'm just giving a hypothetical example. I'm not teaching as a private, okay? So I don't have any coaching center. So let's say my charges are 10,000 rupees from every student, okay? So Monica is there, okay? Mahima is there, Rahul is there, Divanshu is there, okay? Samaksh is there. These are the 5 students, okay? And I am charging 10,000 rupees. This is my fees. Mahima came to me and she told, sir, I don't have 10,000 rupees. Can you please give me a discount? I will pay you only 9,000 rupees. Okay. Friends, tell me whether I will recognize revenue at 9,000 rupees or 10,000 rupees. Of course, I will recognize revenue at 9,000 rupees. Okay. Right. Not 10,000 rupees, 9,000 rupees. I will recognize the revenue. I have given him the discount. Likewise, Rajat is paying me in the form of furniture. And let's say my charges are 10,000 rupees. But the chairs which Rajat has provided me, the value of the chairs are 8,000 rupees in the market. Market value is 8,000 rupees. Friends, what does it mean? It means I have given a discount of rupees 2,000 to Rajat. So my revenue has to be 8,000 rupees, right? Not 10,000 rupees. Have you understood this? Okay. Very good. Then friends, we discussed the concept of consideration payable to a customer. When you are paying money to your customer, okay? So we discussed the concept of consideration payable to customer, and what we discussed, if the consideration payable to a customer results in no distinct goods and services, customer is not giving me any goods and services, I am still paying him some money, right? For example, if there is a tenant, okay, I am providing a house to a tenant, and I am saying that I will give you some lease incentives or I will give you some relocation allowance. Whether tenant is providing me anything, answer is no. So in that case, whatever amount myself as an entity is paying to a customer, that will be reduced from the transaction price. But if there is a distinct goods and services, then what happen? Right? So I am paying to my tenant, okay, and my tenant is also a service provider. He is providing me some services. It means I am giving him a house to live in, right? And he is giving me some other services. Okay. My dear friends, if there is a distinct goods and services, then gross revenue and cost needs to be recognized separately. Gross revenue and cost needs to be recognized separately. Okay. Right? Is that clear? Is that clear? And then what we discussed, if consideration payable to a customer is equal to or less than fair value, right? If customer consideration payable to a customer is equal to or less than fair value, the cost needs to be recognized for this amount. Okay. If consideration payable to a customer is more than fair value, so your customer is giving you a service worth 5,000 rupees and you are paying 7,000 rupees. What does it mean? It means you are giving additional this 2,000 rupees. This 2,000 rupees you are giving as a discount for the goods and services you have sold to your customer, right? So the excess needs to be reduced from the transaction price. But let's say whatever your customer is giving you as a goods and services, you are either paying the same value or you are paying a value less than the fair value of that goods and services. It means you are paying a cost or a discounted cost, right? Is that clear? So friends, we discussed these 4 concepts in the determination of transaction price. Then we discussed allocation of transaction price to various performance obligation. And what we discussed, my dear friends, in the allocation of transaction price to various performance obligation, we discussed that the transaction price has to be allocated on the basis of standalone selling price of the performance obligation, right? This fourth part, allocation of transaction price. We discussed transaction price has to be allocated on the basis of standalone selling price of the performance obligation. Means first you need to identify the standalone selling price, then you need to allocate the transaction price in the proportion of the standalone selling price. You remember, then we discussed how to determine the standalone selling price of the performance obligation. You know, the standalone selling price is the observable price of the performance obligation, market price of the performance obligation, fair value of the performance obligation. Sir, what happens if we will not be able to identify, right? If we will not be able to identify the observable price, the standalone selling price, or it is not available, then what will do? Then you have to estimate the standalone selling price. Sir, how we are going to estimate the standalone selling price? My dear friends, Ind AS 115 has given you 3 steps, 3 models, right? For estimating the standalone selling price. AMMA approach, adjusted market assessment approach, cost plus margin approach, and residual approach. You remember AMMA approach, adjusted market assessment approach, cost plus margin approach, residual approach. These 3 approaches we have discussed, my dear friends. It is not difficult. You can refer the Excel file and you can refer the full video. You will be able to learn the concepts very easily, right? So this is what we have discussed, my dear friends. AMMA approach, cost plus margin approach, and residual approach. Okay. Then, my dear friends, we discussed the allocation of discount to the performance obligation, allocation of variable consideration to the performance obligation. These aspects we have discussed. And then we discussed the recognition of revenue when the performance obligation are satisfied. When to recognize the revenue? You have to recognize the revenue when the performance obligation are satisfied, either at a point in time or over the period of time. Either at a point in time or over the period of time, right? So friends, what is at a point in time means at a time and over the period of time. Friends, when the revenue has to be recognized, when you will say that the performance obligation is satisfied, when the control is transferred to the customer. And the control can be transferred to the customer, right? Either at one go at a point in time or over a period of time Okay. So my dear friends, the guidance how to recognize the revenue over a period of time. So when you will say that the revenue has to be recognized over a period of time, guidance is given in Ind AS 115. And when you will say at a point in time, if the condition relating to over a period of time will not met, you will say that control is transferred at a point in time. Okay. You remember 3 conditions we discussed. 3 conditions we discussed. Do you remember? Quickly, I will share. The control will be satisfied over a period of time when any of the condition, there were 3 conditions, you remember, and any of the condition will met, you will say that the control has been transferred over the period of time. The condition number 1 was the customer is simultaneously receiving and consuming the benefit of goods and services as the entity performs. So when the service provider is transferring the goods and services, the customer is receiving and consuming the benefit. The classic example is the morning example, newspaper. The newspaper vendor throws the newspaper into your balcony. Every day you will read the news and you will scrap the newspaper, right? यही करते हैं आप? Yes. Are you reading the newspaper for today after 3 days? Answer is no. So the entity performs. The newspaper vendor throws the newspaper into your balcony. You read the newspaper and you also throw the newspaper. Okay. So newspaper agency, security guard agency, gym services, electricity, water, these kind of companies are these kind of companies are providing the goods and services, and the customer is simultaneously receiving and consuming the goods and services. Sir, so this revenue has to be recognized over a period of time, right? So whether these companies recognize the revenue on a daily basis, answer is no. They have to recognize the revenue at a fixed intervals, right? For example, fortnightly, for example, monthly, bi-monthly, okay? Electricity, are you storing electricity? Or the moment the electricity is flowing and you are consuming the benefit arising out of the electricity. Condition number two, the customer control the asset and it is created, the customer control the asset, and as it is created or enhance the benefit passed on to the customer, right? So for example, the house is in my possession. I called the painter to paint my house, right? The moment painter are painting my house, in my house, there are 4 rooms. So the painter has completed one room. Tell me, can I get the benefit? So whether benefit is getting passed to me the moment the painter are performing. For example, tomorrow, these painters have completed one room and tomorrow they did not turn up. They have not come to paint, right? I waited for them, but their phones are switched off and they are not picking and responding. So what should I do? I will engage another painters, but tell me whether those painters, the new painter, right, whether they have to paint the room which is already completed again, answer is no. The whatever work the painter has done, for example, wall putty, right? If you know, while doing a painting, they just do the rubbing of the walls. That is, they are putting, if there are some holes in the wall, they are putting the wall putty, right? If the painter has already done that, the new painter will not do that, right? So second condition is what? The customer control the asset, and as the entity performs, the benefit is also getting passed on to the customer. The position in the hands of the customer is very important, right? So in this case, for example, construction work, paint work, these kind of companies can recognize revenue over a period of time. You remember the percentage of completion method, right? Condition number three, the entity's performance does not create the asset with alternative use, right? And the entity has a right to receive the consideration to extent the work has been performed. ISRO, for example, ISRO got a contract to ISRO got a contract to manufacture some missiles, okay, and which is for the France, and those missiles does not have any alternative use. Those missiles are dedicated manufactured for the purpose of France, okay. So the whatever ISRO is doing, it is not with the alternative use. If France will deny, it cannot sell this missile to anyone else because those missiles are connected with some internal security system of the France government, for example, right? So for other country, it is of no use, okay. So what is the third condition? If entity is performing goods which is of no alternative, which is of no alternative use, and entity has a right to receive the consideration to the extent of the work completed. Then we discuss the measurement of the progress of the work, right? You remember input method, output method we discussed in our detailed class, okay? So my dear friends, these kind of aspects we discussed in the 5-step model. Identify the contract with the customer, okay, then what is there? Determine the performance obligation, then determine the transaction price, allocate the transaction price, and recognize the revenue at a point in time and over a period of time. Friends, then we discussed some new concepts like loyalty we discussed, right? We discussed the repurchase agreements, we discussed service concession arrangement. So these kind of aspects we discussed, my dear friends, during our detailed lecture. So sir, in the last 30 minutes you covered many topics, right? So friends, few topic I will get into in few details, few topic I have just touched upon. So the idea was to just make you guys familiar with Ind AS 115, which was already completed. This was the idea, right? The idea was not to cover everything in detail because this is a revisionary session. This is not a learning session, right? Okay. Is that clear? I hope Ind AS 115 revenue from contract with the customers. I hope this word file is there on your screen. Ashok ji, will you confirm if this word file is visible? Okay. Yes. So friends, quickly we'll do some critical and important questions, and through the questions We will get deeper into those concepts also, right? And friends, just a disclaimer in that revision, of course, I have not covered 100%, okay? But yes, I have covered the thematically the entire Ind AS 115. Few aspect I am going to cover right now also, okay? Yes. So just a minute. I have to cover a question. Yes. Question number 2 I need to cover, my dear friends. Question number 2 I need to cover. An entity enters into a contract with 1000 customers, okay? Each contract includes the sale of one product. I hope this is visible. Yes. Yes. An entity enters into a contract with 1000 customers. Each contract includes a sale of one product for rupees 50. 1000 total products multiplied by 50. So what is the total consideration? 50,000 rupees the total consideration. So number of customers are 1000. Okay. Price of one product is 50 rupee. And the total consideration is number of customer multiplied by price per product 50 rupee. 50,000 is the total consideration, my dear friends. Cash is received when control of a product transfers. Cash is received when control of the products transfers. Okay. The entity's customary business practice is to allow a customer to return any unused product within 30 days and receive a full refund. The entity's cost of each product is rupees 30. So this concept is for right of return. Okay. So one thing we have gauged right now, this concept is for right of return, right? Right of return. So with the help of this question, we are going to cover the concept of right of return. Okay. And what is given here in the question? In the question, it is given that 30 days is the return period. In the 30 days, if the customer has not used, the customer can refund the product, return the product, and the customer can claim the refund. Okay. And what is the cost of the product? 30 rupee. And what is the sale price of the product? 50 rupee. 20 rupee is the profit. The entity applies the requirement in Ind AS 115. The entity applies the requirement in Ind AS 115 to the portfolio of 1000 contract because it reasonably expects that in accordance with para number 4, forget about para number 4, you are not required to remember any paragraph. Okay. The effect on the financial statement for applying this requirement to the portfolio would not differ materially from applying the requirements to the individual contract within the portfolio. What this line is saying? This line is saying simple. You have a portfolio of 1000 customer, right? You have a portfolio of 1000 customers. Okay. You have a portfolio of 1000 customers. Okay. So every customer will not return. So you have to apply your best estimate on the entire portfolio. Out of 1000 customer, how much do you expect they will come back and they will return the goods? Okay. Since the contract allows a customer to return the product, the consideration received from the customer is variable, right? Since the contract allows a customer to return the product, the consideration received from the customer is variable. Variable means, sir, but the price is 50 rupee only. So it's not about the price. Tell me, are you sure and certain today that you will be able to receive this total consideration of 50,000 rupees? Are you able to? Will you say with the conviction that I have sold goods worth rupees 50,000 and I will receive rupees 50,000? Can you say with conviction? Answer is no. It means there is a variability element. There is a variability element in it, right? Which will be confirmed upon happening or non-happening of some future events. Means 30 days expiry. Okay. So again, some other paragraph of Ind AS 115. So since the contract allows a customer to return the product, the consideration received from the customer is variable. To estimate the variable consideration to which the entity will be entitled, the entity decide to use the expected value method because it is the method the entity expect to better predict the amount of consideration to which it will be entitled. Using the expected value method, the entity estimate that 970 products will not be returned. Okay. So what it says? It says it is a variable consideration, and variable consideration, if you remember, in the step of transaction price, right? So sorry, yes, in the steps of transaction price, the variable consideration was required to be measured using two methods. One was expected value method, which is expected value method is also known as a probability weighted method. Expected value method is also known as probability weighted method, my dear friends. Probability weighted method, right? And the second one was most likely approach. You remember two method: expected value method, and what? Most likely approach. Most likely approach. Okay. So this expected value method is also known as a probability weighted method. Okay. Probability weighted method. This is also known as probability weighted method. Okay. So applying the probability weighted method, they expected that 970 products will not be returned and almost 30 products will be returned. So return ratio is around 3%. Return ratio is 3%. The entity estimate that the cost of recovering the products, the cost of recovering the product will be immaterial, and expect that a return product can be resold at a profit. So the entity estimate that whatever product we receive back, we will be able to sell at 50 rupee. Okay. The cost is 30, we'll be able to sell at 50. Determine the amount of revenue, refund liability, and the asset to be recognized by the entity for the said contracts. You need to determine the amount of revenue. You need to recognize the revenue when you sold goods to 1,000 customers. That right? What is the amount of revenue you'll recognize? Having said that, this is a variable consideration. So what is the best estimate? On the basis of best estimate, you have to recognize the revenue. So my dear friends, first of all, tell me how much money we have received. First of all, tell me how much money we have received. हमने मनी कितना रिसीव किया है? How much money we have received? Sir, money we have received for 970 customers or money we have received from 1,000 customers? Sir, we have received the money from 1,000 customers. So you will debit your bank account. You will debit your bank account by what amount? You will debit your bank account by what amount? Tell me. You will debit your bank account by what amount? You have to debit your bank account by 1,000 multiplied by 50 by 50,000 rupees. You have to debit your bank account. Tell me at what value you will credit. At what value you will credit your revenue? If today you estimate that you will be able to retain the customers worth 970 product. So 970 customer will not come and return. 970 customer will not come and return the goods. So you have to recognize the revenue. Remember, to the extent the collection is probable. Collection is probable means even whatever you have collected, the reversal will not happen, right? So friends, you have to recognize the revenue for 970 product. Bank account debit 50,000 rupees to revenue. 970 multiplied by 50 comes at 48,500 rupees. Friends, bank account debit by 50,000 rupees, revenue credit by 48,500 rupee. Friends, where the differential credit will go? The differential credit will go to the differential credit will go where? The differential credit will go to the refund liability. Till the time 30-day time period will not expire, the customer will not come. You have to carry your refund liability as per the best estimate, right? As per the best estimate. Okay. So friends, what is your bank account debit by 50,000, revenue credit by 48,500, and to refund liability by 1500. 30 product multiply by 50 rupee. Sir, we sold goods. We recognize revenue. Don't you think you have to also recognize cost of sales? Otherwise, this entire 50 rupee will flow into the profit. You have to recognize an expense of 30 rupee also, no, which was the cost of the goods. So I have to debit my cost of sales. I have to debit my cost of sales by what quantity? 1000 or 970. So to the extent you recognize revenue, you have to recognize the cost of goods sold also with the same quantity. 970 multiplied by 30, which is 29,100. But your inventory is out. Tell me, like your bank has been credited for 1000 quantity, 1000 product. Your inventory is also out for 1000 product. So you have to debit cost of sales by 29,100. You have to credit inventory by 1000 multiplied by 30, which is 30,000. So debit by 29,100, credit by 30,000. The differential 900, where the differential 900 will go? Right to recover inventory asset. You remember, you have recognized a refund liability, right? So likewise, you have to recognize a right to recover asset, which is inventory. Okay. So this is what the accounting entry is all about, my dear friends. So how much revenue you have recognized on the day one? On the day one, you have recognized a revenue of 48,500. How much refund liability you have recognized? You have recognized a refund liability of 1500. How much asset you have recognized? You have recognized an asset of 900 rupee. Okay. Sir, what happens if, let's say, 30 days has expired and nobody has come to return? Nobody has come to return the product. क्या करेंगे? What you will do? One thing is very clear. Whatever asset you have recognized, whatever liability you have recognized, you have to reverse it. Right? You have to reverse it. So what you will do? Refund liability, debit, credit, revenue. Cost of goods sold. So your asset credit and debit will be cost of goods sold. As good as the same entry which you have done earlier. So you are not required to refund any money. So that you have to debit, liability debit, credit, revenue. You are not required to recover any asset. You have to credit asset. You have to debit cost of sales, because now you are recognizing a revenue. You have to recognize a cost of sales also in the P&L, so that your right profit is how much? 1500 is revenue, 900 is cost of sales, 600 is profit, which is 20 rupee on 30 product. I hope it is clear to everyone. You can see the solution which is given by in the study material or by ICAI. So these theory, you are not right to return. You are not required to write this detailed theory with the paragraph number. No, not required. You just need to, what you need to mention, you need to mention your workings clearly, your steps clearly, right? With some narrative. Okay. Narrative in your own language. Okay. Right? For example, what they write, a revenue of 48,500, 15 to 970 product not expected to be returned. A refund liability of 1500, an asset of 900, right? Instead of writing this, you can also put a journal entries. Okay. You can also put a journal entries. I hope this is clear to everyone, my dear friends. Is this clear to everyone? Yes or no? Please tell me. Is this clear to everyone? Yeah. Shall we go to the other aspects? Shall we go to the other aspect? Hmm? Yes or no? Yes. Yes. So now we need to go with the bill and hold arrangements. We have to go to the bill and hold arrangements. Okay. Question number 2 we have covered. Now let's go to the question number 4. Sir, are we going by the even numbers? First 2, then 4. Bill and hold arrangement. ये सुना सुना लग रहा है, सुना सुना लग रहा है? Is it something which is heard, or is it something which is blank? Heard? Bill and hold arrangement. Sir, what is bill and hold arrangement? Sir, ये किस चिड़िया का नाम है? बिल एंड होल्ड अरेंजमेंट. What is bill and hold arrangement, sir? You remember bill and hold means you have sold a car to a customer. You have sold a car to a customer. The customer told, I will take the car after 6 months. You take the money. Means you bill and you hold. So service provider who has billed means who has sold goods and services. He is also holding those goods and services. He is also holding those goods and services. Okay. So what is bill and hold arrangement? You have understood it. You have remembered it. Bill and hold arrangement याद आया आपको या नहीं आया? Bill and hold arrangement. Are you able to remember or you are not able to remember bill and hold arrangement? Yes or no? Please tell me. Yeah. Are you able to remember bill and hold arrangement? Right. So there was some condition. There was some condition for bill and hold arrangement. Right. So first of all, when I'm saying bill and hold, is it two performance obligation or is it one performance obligation? I am a dealer of a car. I am a seller of a car, right? And Monica came to me to purchase the car. So Monica bought Tata Nexon from me. Okay. So when Monica bought Tata Nexon from me, I charged 10 lakh rupees to Monica. Now Monica paid 10 lakh rupee to me and Monica told, sir, I will come after 6 months and I will take this car from you. Okay. So in this case, I am providing her a car, means I am billing her a car, and I am also holding this asset for 6 months. Whether this asset belongs to me as a service provider or as a vendor, answer is no. This belongs to a customer. Whether I want to hold this asset, answer is no. I am holding this asset on the request of a customer. It means I am giving her a goods and I am also giving her a holding or storage services. Okay. So friends, you have to recognize revenue for bill and hold arrangements, right? When few conditions will be satisfied. First of all, the reason must be substantive. Right? The reason must be substantive means the customer has specifically requested the entity to store goods in their warehouse or in their premises, in the vendor premises. So customer must have specifically requested to store goods, to hold goods in the vendor, in the service provider or seller premises. That is number one. Number two. What is number two? The product must be identified separately. Means whatever this entity is selling, like I am selling a car to Monica. So car is a product which can be identified separately, right? So that is number two. Number three, the product currently must be ready for physical transfer. The product must be ready for physical transfer currently, right? In the present condition. In the present condition, the product is ready to transfer. In the current condition, the product is ready to transfer. Okay. Let's say the car is not ready. Okay. While the car is in my South India warehouse. And what I did, the car is in my South India warehouse and Monica came to me and Monica paid me the full amount, right? 10 lakh rupee. And I told her that, okay, I will get the car. And there was some strike which is going on right in my South India plant. And I will be able to get the car only after 6 months. While I have raised the bill, while I have collected the money, but whether I am holding this car on behalf of Monica, answer is no. I am not able to transfer it immediately. Right. So the product is not ready to for the physical transfer. The product is not ready. Means product is not in my showroom. Okay. So the product currently must be ready for physical transfer, and the entity cannot have the ability to use the product or direct it to another customer. The fourth condition. What was the first condition? The hold, the hold or such storage has to be specifically requested by the customer. Number two, the product must be identified separately. Number three, the product is ready for physical transfer in the current situation, right? It is ready. Number four, the entity cannot use this product or cannot sold this product to the another customer. If these conditions will be satisfied, you can say that there is a bill and hold arrangement, and you have to consider this product and the storage service or holding service as a separate performance obligation, and you have to allocate the transaction price into these two performance obligation. I hope you guys have been able to understand or recap these four condition of bill and hold criteria. We did a question of spare parts also. If you remember, we did a question of spare parts, right? Question of spare parts. And if my memory serves me right, that was illustration number 68. Okay, question number 4 from the ICAI study material. Bill and hold arrangement. Shall we enter into this question and solve this question? An entity enters into a contract with a customer on 1st April 20x1 for the sale of a machine and spare part. For the sale of machine and a spare parts. Okay. So two product, machine and spare part. These are the two performance obligation or one performance obligation? Two different performance obligations. The manufacturing lead time for machine and spare parts is 2 years. The manufacturing lead time for machine and spare part is 2 years. Okay. So in 2-year time, the machine and the spare parts are going to be manufactured. Upon completion of manufacturing, the entity demonstrates that the machine and spare part meet the agreed upon specification in the contract. Okay. The promises to transfer the machine and spare parts are distinct and result in two performance obligations. This is what we already discussed. That each will be satisfied at a point in time on 31st March 20x3. The contract was entered on 1st April 0x1 and this delivery is scheduled on 31st March 20x3. Okay, after 2 years. The customer pays for the machine and spare parts. So on 31st March 20x3, the customer pays for the machine and the customer pays for the spare parts also. But only takes physical possession, only takes physical possession of the machine, Okay. So the customer pays for the machine and spare parts, but only takes physical possession of the machine, right? But only takes physical possession of the machine. So he has not taken the possession of spare parts. Now the story begins. Although the customer inspect and accept the spare parts, right? So the customer has seen the spare parts, checked the spare part, inspected the spare part, and then the customer requested that the spare parts be stored at the entity's warehouse because of its close proximity to the customer factory. Sir, this is the same question which we have done in illustration number 68 of ICAI study material. Yes. So the customer requested to the vendor, to the manufacturer, can you please keep these spare parts into your warehouse because it is very close to my factory. The customer has legal title to spare parts and the parts can be identified as belonging to the customer. So these spare parts are separately earmarked to the customer. It is easily and completely identifiable, right, that it belongs to the customer. Okay, and customer has a legal title also. Furthermore, the entity store the spare part in a separate section of its warehouse, and the parts are ready for immediate shipment at customer request. The parts are immediately ready, right? The only thing is customer does not want the delivery right now. The parts are ready, right? The entity expect to hold the spare part for 2 to 4 years, and the entity does not have the ability to use the spare part or direct them to another customer. The entity expect, the customer wants that this entity has to hold the spare part for 2 to 4 years, and the entity does not have the ability to use the spare parts or direct them to another customer. You remember the fourth condition? The entity cannot use these spare parts for their own benefit, or they cannot sold this aircraft to another spare parts to another customer. Okay. How will the company recognize revenue from sale of machine and spare parts? Is there any other performance obligation attached to the sale of goods? This is the real cream of the question. This is the real cream of the question, that how the company recognize revenue for sale of machine and spare parts, right? Spare parts. Is there any other performance obligation attached to the sale of goods? While you guys will be able to answer this, but somebody who has not read Ind AS 115, what thoughts will run in his or her mind? Let me tell you. Let's say I never read Ind AS 115. I am a naive student. I am an innocent student. Okay. I read this paragraph, I read this question, and just listen what I am debating in my mind. How will the company recognize revenue for sale of machine and spare part? Okay. So machine, the customer has taken the delivery, but spare part is still lying with the vendor, lying with the service provider, manufacturer. So this entity has to recognize revenue only for the sale of machine. So spare part तो उसी के पास है ना? So the entity should not recognize the revenue of the spare part. Okay. So that is the thought which is coming into my mind, right? I'm just debating. I'm not saying what is right, what is wrong. Is there any other performance obligation attached to the sale of goods? No. There are only two performance obligation ना, sale of machine, sale of spare part. वो तो उसने रख लिया अपने, वो तो उसने अपने वेयर हाउस में रखा हुआ है, राइट? कस्टमर ने रिक्वेस्ट किया, उसने रख लिया. इसमें कोई अमाउंट तो बताया नहीं. ओके. So I think there are only two performance obligation. Okay. So this is what I am debating in my mind. Why? Because I never read Ind AS 115. But at the same time, now I read Ind AS 115. So now I am saying, oh, how will the company recognize revenue for sale of machine and spare part at a point in time on 31st March 20x3, right? So the entity has to recognize revenue for sale of machine and spare parts, right? When? On 31st March 20x3. Okay. So because the entity is ready to deliver the goods and spare parts, machine and spare part, the customer has paid the money also. The entity is keeping this spare part only because of the request of the customer. The entity does not want to keep the spare part. Why? Why entity will waste? Why entity will waste their storage services? Why? Right? So one thing is very clear. The company has to recognize revenue from sale of machine and spare part on 31st March 20x3 at a point in time. Is there any other performance obligation? Now I need to remember the criteria. Remember the criteria of bill and hold arrangement. Number one, the reason for the bill and hold arrangement must be substantive. Is it substantive? Answer is yes. The customer has specifically requested for the entity to store the goods in their warehouse owing to the close proximity to the customer's factory. Number two, the product must be identified separately as belonging to the customer. Those spare parts which are lying in the warehouse, are they separately identifiable? Answer is yes. The spare parts have been specifically identified and inspected by the customer. Third, the product currently must be ready for physical transfer to the customer. The product currently must be ready for physical transfer to the customer. It is already mentioned in the question. The spares are identified and segregated, therefore ready for delivery. Fourth, the entity cannot have the ability to use the product to direct it to the another customer. Spares have been segregated and cannot be redirected to the another customer. Even the entity cannot use the spare parts and the entity cannot sell these spare parts to the other customer. Therefore, all conditions of bill and hold are met, and hence company can recognize revenue for sale of spare parts on 31st March 20x3. But the third performance obligation is what? Sale of machine, sale of custodian service, or you can also say that warehousing services. Sir, whether we have to use the same word custodial service? Answer is no. You can use the word warehousing services. You can also use the word storage services. Okay. Right. So the third performance obligation is custodial services. Okay. Sir, now this contract is entering into a same time. Okay. Machine, spare part, and this custodial service also. Sir, how the revenue is going to be allocated? We understood there are three performance obligation, and when there are three performance obligation, the revenue has to be allocated. The transaction price has to be allocated to these performance obligation. For example, the total transaction price is 10 lakh for this entire arrangement, 10 lakh. Now there are three performance obligation. 1, 2, 3. 1, 2, 3. Three performance obligation. Let's say the transaction price, and friends, I am just revising those concepts also. For example, transaction price is 10 lakh rupee. Okay. So this 10 lakh rupee has to be allocated in the standalone selling price of machine, spare part, and custodial service. For example, the machine value, the standalone selling price, the fair value of the machine is 8 lakh rupee. Okay. The fair value of the spare parts is, for example, 2 lakh rupee. Okay. And the fair value of the storage service for 2 to 4 years is again 1 lakh rupee. Okay. So now this 10 lakh has to be allocated in the ratio of 8:2:1, right? Or what we can say that the total price of this arrangement, total fair value of this arrangement is 8 plus 2 plus 1, 11 lakhs. So you are getting, the customer is getting the goods and services worth 11 lakh rupee at 10 lakh rupee. Means the customer got a discount of 1 lakh rupee in this entire arrangement. Okay, right? So either discount has to be allocated in the ratio of 8:2:1, or either the transaction price has to be allocated in the ratio of 8:2:1, right? So that will become the amount of the revenue. Okay, is that clear? I hope this question is clear to all of you, my dear friends. I hope this question is clear to all of you, right? And this storage services. So the whatever amount will come, the revenue has to be recognized at a point in time for what? For at a point in time for what? Machine and spare parts. But for custodian services, storage services, warehouse services, it is 2 to 4 years. So it has to be recognized over a period of time. Custodian services. Such services shall be given for a period of 2 to 4 years from 31st March X3, where services are given uniformly and customers receives and consumes benefits simultaneously. Revenue for such service shall be recognized on a straight line basis over a period of time. Okay. I hope this is clear to each and every one of you, my dear friends. Please let me know if you are not able to understand it. Please let me know. Yes, clear to everyone? Okay, great. Great. So we covered question number 2, question number 4, right? And with the help of question number 2 and question number 4, we have also covered the concept of right of return, bill and hold criteria, right? And we touch upon the concept of variable consideration in the question number 2. Then we touch upon the allocation of transaction price in this question also, right? At a point in time, over a period of time, in the allocation in the ratio of standalone selling price. Okay, we discussed these concept as well. Now let me talk about let me talk about service concession arrangement. Yes, service concession arrangement. Okay. Again, it is coming in the appendix of Ind AS 115. This service concession arrangement, a very important concept, my dear friend. What is a service concession arrangement, first of all? Are you aware about the service concession arrangement? Any one of you? Are you aware about the service concession arrangement? Service concession arrangement is typically an arrangement between a government and the private party. A government is a government and the private party. Okay, a government or government entity also. For example, NHAI, National Highways Authority of India. For example, National Highways Authority of India is a government entity. They have given a contract of toll plaza. They have given a contract and they have entered into an arrangement or a contract with a private party ABC Alok Garg Private Limited, okay, to construct a road, to construct a highway from Delhi to Meerut, okay, construct a highway from Delhi to Meerut, right? So they entered into a contract, and what they will do? So this government entity or government is known as a grantor, and the private party is known as an operator. So the government has also limitation of funds. That is why for developing the public infrastructure, the government welcomes the private party. Please come and participate and please help us in developing the infra. Sir, why this Alok Garg Private Limited will develop the road from Delhi to Meerut? What they will get in return? So in return, the government will say, you can put two toll plaza on that 50-kilometer highway. Two toll plaza. Okay. Sir, what happens with the toll plaza? This private entity will collect the toll from whomsoever who will use that highway. He has to pay the toll money. He has to pay the toll charges to that private party. That's right. So friends, typically what happens? The government or the government entity, right, gives a contract or an arrangement to the private party to develop the infra, and in return they will provide a concession period. A concession period means not a discounted period. Concession period means period, right? For example, they will provide this infra developer, road developer, that they will collect the toll for the another 20 year or 30 years. Okay. So by spending 200 crore, 300 crores, they are getting a right to collect toll for another, for example, how many years? 20 years. Okay. So this will be their income. This is known as a service concession arrangement. My dear friends, in the service concession arrangement, there are two type of arrangement. Arrangement number one, okay. So while the service concession arrangement, you will heard about boat, build, own, operate, transfer, build, operate, transfer. You will, in your real and practical life, you will heard about these words also. Okay. Okay. So friends, now coming back to this. So in the service concession arrangement, there are two period. Number one, construction period. Number two, operation and maintenance period. Okay. You must have seen, and I'm pretty sure whomsoever is listening to this lecture, they have seen the construction of highway or the roads in their lifetime. Okay. So what is that period? Construction period. So once that period will be over, you will see a smooth ride on that highway, and suddenly after few kilometers you have to stop and you have to pay the toll charges. A brand new toll plaza, right? So friends, so now the construction is over, right? Now the period of operation and maintenance has started. Now this entity has started operating. This private party has started operating and maintaining or upgrading. Okay. So friends, now how the revenue has to be recognized for this private party. And my dear friends, in the form of a consideration, okay. Now tell me one thing. So let's say a private party who has spent 200 crore rupees, in development of an highway, in construction of an highway. whether that highway belongs to the private party. क्या वो हाईवे प्राइवेट पार्टी को बिलोंग करता है? whether that highway belongs to the private party, बताइए, बताइए। ये गवर्नमेंट है, right? Government has given a contract to the private entity, private party, right, for development of road, development of road, right? In return, this private party will collect toll. This private party will collect toll, right, for 20 years. Right. Now tell me one thing. This private party has constructed road. This private party has constructed road, and they spent 200 crores, right, over a 1 year period where they have developed this highway. They have constructed the highway. Whether this 200 crore is a property, plant and equipment for this private party, tell me, they invested, they spent 200 crore in the first year, and once it will get over, they will be able to collect the money for another 20 years. So one thing is very clear, they will reap the fruit of the tree of 200 crore which they have seed today, right? ये जो 200 करोड़ रुपए इन्होंने लगाए हैं, इन 200 करोड़ रुपए का फ्रूट कब मिलेगा? अगले 20 साल में मिलेगा। इट मींस टू अर्निंग the revenue for the next 20 years, they have invested 200 crore rupees today. So one thing is very clear, this 200 rupees is not the expense, it is an asset. Now my dear friend, which asset? Which asset? कौन सा asset है भाई? है तो asset ना? So everyone is clear ना? It is an asset. It is an asset. Which asset? It is an asset, but which asset? Which kind of asset is this? Tell me which asset. Friends, friends, this is you remember, you had a full session on the service concession arrangement. This asset will depend upon the form of consideration. This asset will depend upon the form of consideration. Now let me simplify for all of you. The government has told, listen Mr. ABC Private Limited, I am giving you a guarantee, or let's talk differently. So the government told Mr. ABC, I am giving you a right to collect toll for 20 years. Okay, right to collect cash. Doesn't matter if there will be a strike, there will be something else, and you will not be able to collect even a single penny on a single day. All risk is yours. Or probably during the vacation time, you will be able to collect a toll of, let's say, 50 lakh rupee, 10 lakh rupee, 1 crore rupee per day. Again, the reward is yours. So risk and reward is yours. So government is not capping, government is not guaranteeing any collection on a daily basis. Government is saying whatever you collect, it is yours. It means government is giving a right to collect cash to the ABC private party. So in this case, it will be considered as a financial asset. It will be considered as a financial asset. The form of consideration number 2, the government says, see, you spend 200 crores. I'm giving you a right to collect toll for 20 years, but I am giving you a guarantee of 1 lakh rupee every day. I am giving you a guarantee of rupees 1 lakh rupee every day. I am giving you a guarantee. Means if on one day, if you will collect 10,000 rupee, I will compensate you with 90,000 rupee. If on any day you will collect 1 crore rupee, you will refund 99 lakh rupee to me. So government is sharing, right? While government has also given a guarantee, government has capped also. So friends, in this case, when the government has given a guarantee of 1 lakh rupee every day, doesn't matter the collection is 10,000 rupees, 0 or 10 crore rupee, this private party will be able to receive only 1 lakh rupee every day. So friends, this will be considered as an intangible asset where the right to collect money is not there. The right to collect 1 lakh rupee is there. The right to collect the fixed amount is there. So in this case, it will be considered an intangible asset. So which kind of asset will be this? It will be depending on the form of consideration. It could be either financial asset or it could be intangible asset. Okay, intangible asset. Right, my dear friends? I hope you got the full background of this service concession arrangement. My dear friends, we discussed illustration number 75. You remember in our full lecture on Ind AS 115. Now I am going to revise that, and the same question is there coming from study material of ICAI. Let's discuss this question and solve this question quickly. A Limited is in the business of infra and has two divisions. This is the private party, toll roads and wind power. The brief detail of this business and underlying project details are as follows. Bhilwara Jabalpur toll project. The company has commenced the construction of the project in the current year and has incurred total expense aggregating to 50 crore as on 31st December 20x1. On this Bhilwara Jabalpur toll project, the company has commenced the construction, right? Construction phase, construction period, operation and maintenance period. Okay. And the company has incurred total expense. The standard is using the question is using the word expense. Is it an expense? Right? So don't be emotional with the question. Okay. Apply your mind, apply your wisdom, apply your concepts, and then solve the question. Okay, aggregating to 50 crore as on 31st December 2001 under IGAP accounting standard. Forget about accounting standard. Okay, forget about accounting standard. The company has recorded such expense as an intangible asset in the books of account. The brief detail of the concession agreement are as follows. Whatever they have done in accounting standard, we are not required to do anything. Okay, so we have to be concerned about the Ind AS treatment, 115 treatment. Okay. Okay, friends. The brief detail of the concession agreement are as follows. Total expenses estimated to be incurred on the project is 100 crores. Total expenses estimated to be incurred on the project is 100 crores. Okay. So 50 crore already spent, 50 crore has to be spent more. The fair value of the construction services, if government has invited somebody else, and if government would have paid for the construction services, it would have cost 110 crores. Or probably if this entity will charge the construction services from any customer, be it government, the entity will charge 110 crores. So one thing is very clear, the fair value of the construction service is 110 crore, while the expense is 100 crore. Means whatever money this company has spent, it has a value of 110 crores. Okay. Then moving further, total cash flow guaranteed by the government under the concession agreement is 200 crore. Total cash flow guaranteed by the government under the concession agreement is how much? Is 200 crore. Total cash flow guaranteed by the government under the concession agreement is 200 crores. Under the concession agreement is 200 crores. Sorry, my dear friends, just one correction. When the government is, just I realized, so when I was explaining you financial asset and the intangible asset, so I talked reverse. Okay. When you have a right to collect a fixed amount, when you have a right to collect a fixed amount, okay, it will be a financial asset. And when you have a right to collect, it will be an intangible asset. So my bad. I just realized when you have a right to collect a fixed amount, I just realized while reading this question, honestly, right to collect a fixed amount, it will be a financial asset. Financial asset. When there is a right to collect only, no fixed amount, okay, then it will be a intangible asset. Intangible asset. Okay. Okay. So when there is a right to collect a fixed amount, in my example, the government has fixed amount of 1 lakh rupee. Okay. So that will be a financial asset model. When the government will say that, okay, When the government will say that I am giving you a right to collect, doesn't matter you collect 10,000, doesn't matter you collect 10 crore, all yours. It is an intangible asset model. Okay. So this is a correction of what I have covered, what I have told 5-6 minutes back. Okay. Is that clear? Is that clear, my dear friends? Is that clear? Okay. This is the correction. Okay. Now coming to this. Total cash flow guaranteed by the government under the concession agreement is 200 crores. So this is guaranteed. Which model is this? Financial asset model or intangible asset model? It is financial asset model. It is financial asset model. Okay. Then, so this is the total cash flow. Finance revenue over the period of operation phase is 15 crore rupee. So there is a finance revenue over the period of operation is 15 crore rupee. Other income relate to the services provided during the operation phase. Now let's solve this question. What will be the first entry, my dear friends? What will be the first entry? So first of all, you have to create an asset. You have to create an asset. Which asset is this? Financial asset or intangible asset? It is a financial asset. So financial asset you will debit. But what will you credit? What will you credit? Question number one. At what value you will debit your financial asset? You spent 100 crore rupees. The fair value is 110 crore rupees. There are two phases, construction phase and operation and maintenance phase. So you have to recognize revenue in the construction phase also, operation and maintenance phase also. So whatever money you have spent, right, you have to recover it. Okay. So friends, the revenue has to be recognized at fair value. The revenue has to be recognized at fair value. So what is the fair value of the construction phase? It is 110 crores. So first entry will be financial asset account debit to construction revenue. Sir, 110 crore entire will be construction revenue. Sir, you have a cost also, na? So yes, it is a revenue. I'm not saying profit. It is a revenue. So simultaneously, you have to recognize a cost also because you have spent the money also, na? So what is that cost? Cost of construction, right? Construction cost account debit to bank account. Construction cost account debit to bank account, right? My dear friends, if you go down, they are asking, what would be the classification of Bhilwara Jabalpur toll project as per the applicable Ind AS? Give brief reasoning. And they're also asking the accounting entries. So in the first case, here the operator has a contractual right to receive cash from the grantor. The grantor has little, if any, discretion to avoid payment, usually because the agreement is enforceable by law. The operator has an unconditional right to receive cash if the grantor contractually guarantees to pay the operator. Hence, the operator recognizes a financial asset to the extent it has a contractual right to receive cash. Okay, so it's a financial asset. What is the accounting entry? First, we will do the accounting entry in the construction phase. This is the construction phase. Construction phase. You have to recognize the revenue of the construction phase. Financial asset account debit to construction revenue 110 crore. But you spent 100 crore only. So construction cost of sales account debit to bank account. Okay. So what is net margin? 10 crore will come as a net margin in the construction phase. Now during the operation phase, you remember in the question it was written that during the operation phase the finance income is 15 crore. So on this financial asset, the government will pay 200 crore, right? Government will pay 200 crore. This 15 crore is a finance income. So what accounting entry will we pass? Financial asset account debit to finance revenue over the period, right? So this financial asset will give you the finance interest, will give you the interest income, finance income. So through the finance income or interest income, financial asset will go up, right? And your your you know your financial asset will be reversed by the collection. Okay. So 15 crore, 15 crore you have recorded as a what? Finance income. Okay. Financial asset account debit to finance income. Now, my dear friends, the total amount you have to receive 200 crores. You have recognized a revenue of 110 crore as a construction phase. Okay. You have already recognized a revenue of 15 crore given in the question as a finance income. What is the residual you have? You have 75 crore. Okay. This 75 crore revenue has to be recognized again. Financial asset to revenue. This is maintenance revenue. This is a maintenance revenue. Now, the next entry, bank account debit to financial asset account. Sir, if it is a maintenance revenue, don't you need to recognize maintenance cost also? Answer is yes. Answer is yes, you have to recognize. What is the accounting entry? Since in the question, it is not given. But if it will be there, of course it will be there. Maintenance expenses account debit to bank account. Right. The classic example, have you seen the people, the staff sitting at the toll plaza and collecting the money and giving you the receipt? The salary of these people who are working on the toll plaza. Have you seen the people who are repairing the road? All these maintenance expense, day-to-day expense has to be debit in the P&L as an expense to bank, right? Nominal account to real account, expense to bank. Okay, right? Friends, now the second part. The second part, friends. Kolhapur-Nagpur Expressway. The company has also entered into another concession agreement with Government of Maharashtra in the current year. The construction cost for the said project will be 110 crore. Cost is 110. The fair value of such construction cost is approximately 200 crore. The fair value is 200 crore. Construction cost की fair value 200 crore है. Okay. The said concession agreement is toll-based project and the company needs to collect the toll from the user of the expressway. No guarantee. Under ICAI, we list bothered, right? So what is the classification? What is the classification? The classification is intangible asset. If you see, here the operator has a contractual right to charge user of public services. A right to charge user of public service is not an unconditional right to receive cash because the amounts are contingent on the extent that the public uses the service. Therefore, the operator shall recognize an intangible asset to the extent it receives a right, a license to charge user of the public service. Okay. And now what we'll do? The fair value is 200 crore. So what is the accounting entry? Intangible asset account debit to revenue, construction revenue, 200 crore. Construction phase accounting, construction phase accounting, intangible asset to revenue, then cost, P&L, cost of sales, cost of construction to bank. Okay. Now, during the operation phase, you recognize an intangible asset of 200 crore. This has to be amortized over a period of 20 years, for example, whatever is the concession period. So, what is the accounting entry? Amortization expenses to intangible asset. Every year you will receive the toll money, bank account debit to revenue relating to the operation phase. Then you will do the expense also. Sir, in the financial asset model, you put the money here, you put the amount, but here you're not putting the amount. Why? My dear friends, because here the amounts are not given, right? Here the amounts are not given. That is why I'm not putting the amount here. Okay. That is why I'm not putting the amount here. Okay. Sir, if there is any maintenance expense to bank, as simple as that, right? So, my dear friends, it's 8:33 now, right? Let's have a break and we will start at 8:45. Okay. We discussed this concept of service concession arrangements in detail, right? Where we have covered the construction phase revenue and the operation and maintenance phase revenue. In the construction phase, you need to create an asset. If you are getting a right to collect a fixed amount, okay, right to collect a cash, I mean to say fixed amount, it is a financial asset. But if you are only getting a right to collect, doesn't matter, it is zero or it is hero, I mean to say 1 rupee or 1 crore rupee, risk and reward all yours, it is an intangible asset model, okay. So friends, you need to create an asset, you need to credit revenue and whatever cost you have incurred. So the revenue has to be recognized at fair value, and whatever cost you have incurred, that is just like a cost of sales, cost of construction, and again, debit the cost, credit the bank, right? And in the, if it is an intangible asset model, during the operation and maintenance phase, you have to amortize that intangible asset as a part of the P&L. And every year you are collecting the money, like in this question, you are collecting the toll. So you have to recognize an income. So bank account debit to toll revenue. But you have a maintenance cost also. You have the people on the toll, right? So you have a maintenance of the road. So all those expenses has to be debited in the P&L. Okay. In the a financial asset model. So financial asset has to be, because financial asset is not going to be depreciated or amortized. If in financial asset, finance revenue will increase the financial asset, and when the government will give you the money, so your financial asset will start getting credited. Okay. This is how after the concession period our financial asset will become zero. Okay. Now, my dear friends, let's discuss the concept of variable consideration, right? So here I am discussing the question number 6. Okay. And this volume discount variable consideration I have written, right? It was not written earlier. I have written it. Okay. So friends, volume discount variable consideration. This is one of the game changer for the, like FMCG. For example, Pepsi, Coca-Cola, they are selling goods to the retail chain stores throughout the year, and they have a volume discount. For example, if you buy X quantity, we'll give you 5% discount. If you buy Y quantity in the year, we will give you the let's say 10% discount on the entire quantity, the earlier quantity as well as this quantity also. So volume discount means discount on the basis of volumes. Okay. So typically speaking, it is a variable consideration. Why? Because this consideration is not fixed. It is depending on achieving that volume, you will receive the discount. So it is a contingent. It is contingent upon happening of some future event, and hence it is a volume discount. Okay. So just a minute, friend. Yes. Right. So let's discuss this question. And this is one of the concept of variable consideration. This is one of the concept of variable consideration. Okay. So this is one of the concept of transaction price. Variable consideration is one of the concept of transaction price. ABC Limited Supplies. I hope this is visible to everyone. Yes. ABC Limited supplies plastic bucket to wholesaler customers. As per the contract entered into between ABC Limited and a customer for financial year 1920, the price per plastic bucket will decrease. The price per plastic bucket will decrease retrospectively. Means the earlier quantity price will also decreased. Okay. The earlier quantity delivered will decrease retrospectively as sales volume increases within the stipulated time of 1 year. Okay. So it's a window of 1 year. The price applicable for the entire sales, please mind these lines. It says that for the entire sales within the year. So period is very important, right? Within the year it is talking about. Next it is talking about retrospectively entire sales. Okay. Yeah. Price per unit is 90 if the volume is up to 10,000 unit, the applicable price to the customer is 90. If the customer will acquire, if the customer will purchase more than 10,000 units and up to 35,000 units, the applicable price for the entire sale will be 80 rupee. If the customer will purchase more than 35,000 units, right, whatever, more than 35,000 units, the applicable price for this entire units will be 70 rupee. All transactions are made in cash. All transactions are made in cash, right? Banking channel से भी होती तो क्या problem थी? Suggest how revenue is to be recognized in the books of accounts of ABC Limited as per the expected value method. Friends, in while computing the variable consideration, we have covered two aspects. We have covered expected value method and we have covered binary method, which is most likely approach. Are you able to remember those expected value approach and are you able to remember that? Expected value approach and most likely approach, right? What is a expected value approach? It's a probability weighted approach. And when this approach is useful, when there is a multiple outcome of a single event, right? And what is a most likely approach? It's a binary outcome. Either it will happen, it will not happen, right? Yes or no answer. So there are two approaches, expected value approach and the most likely approach. Let's solve this question, right? Let's solve this question. Okay, friends. Can we solve this question number 6? Yeah. Okay. So suggest how revenue is to be recognized in the books of accounts of ABC Limited as per the expected value method, considering a probability of 15%, 75% and 10%. Okay. 15, 75 and 10 for sales volume of 9,000, 28,000 and 36,000 units respectively. So here for one event, what discount has to be given to this customer, right? There are three probabilities. There are 15% probability that this entity will sell 9,000 unit to that customer. Okay. Or customer will buy 9,000 units. There are 75% probability that the customer will purchase 28,000 units. There are 10% probability that the customer will buy 36,000 units. Okay. And you can see for all these units, the slabs are different. For 9,000 slabs is 90. For 28,000 slab is 80. For 36,000 units slab is 70. The applicable price is 70. Okay. This is the slab which is given here. For workings, assume that ABC Limited achieved the same number of units of sales to the customer during the year as initially estimated under expected value method for the financial year 1920. Okay. For the financial year 1920, right? Is that clear? Yeah. So this is the probability and this is what they are saying. This is actual scenario also. Now, the second part they are asking, in case ABC Limited decide to measure revenue based on the most likely method instead of expected value method. Most likely method means what are the chances of more than 50%? So if you see in this case, 75% chances are 28,000 unit means there are more chances of getting into the middle category, 80 rupee applicable category, right? वो 10,000 से 35,000 units वाला. Okay. So how will the revenue be recognized in the books of accounts of ABC Limited based on the above available information? For workings, assume that ABC Limited achieved the same number of units of sales to the customer during the year as initially estimated under most likely method for the financial year 1920, right? Sales volume of 28,000 units given under expected value method with highest probability is the sales estimated under most likely method 2. Okay, right? So this is what it is given. So what is the difference between point number 1, point number 2? Point number 1 is asking you to solve this question using the expected value method. Point number 2 is asking you to solve this question by most likely method. Okay. And what is most likely method? Where the probability was 75%, which is more than 50%, and which is for 28,000 units. You are required to pass Journal entries in the books of ABC Limited if the revenue is accounted for as per expected value method for financial year 1920. Okay. Now, my dear friends, let's solve this question. Let's solve this question. Okay. Question number 6. Question number 6. Okay. So, friends, if I talk about this question number 6, right? Just a minute. Okay. If I talk about this question number 6, let's come here in the question number 6. I hope this Excel file is visible. Ashokji, Excel file is visible. Yes, friends. The question talks about three bucket, 9,000 unit, 28,000 unit, 36,000 unit. What is the probability of these buckets? 15%, 75%, 10%. If I talk about my probability related sales volume, if I have to estimate how much is the total probability of my sales volume of 100%, this multiply by this, there is a 15% chances that I will be able to sell 9,000 unit. There is 75% chances I will be able to sell 28,000 units. There are 10% chances I will be able to sell 36,000 unit. Means the total probability related sales volume is sales units multiplied by respective probabilities, which is 25,950. Now, if my 1350 is my sales unit, right? If 1350 is my 1350 is my sales unit, how much price is applicable on this? 90 rupee up to 10,000 unit. If I will be able to sell 21,000 unit, what was the applicable price? 10,000 to 35,000, 80 rupee, right? If my sales unit is, so probability related sales volume is 3600, but if my sales unit is 36,000, what will be the applicable price? 70, right? So on this sales unit, applicable price is 90, on this 80, on this 70. So what is my probability related sales value? What is my probability related sales value? Probability related sales value कौन सी होंगी मेरी? कौन सी वैल्यू होगी? This one, sales unit multiply by probability multiply by sales price, right? Sales unit multiply by, let me name it as a, B, and this is C. Okay, so this is A multiplied by B multiplied by C. Okay, right? So I got the probability related sales value, means value divided by volume. It will give me a price. What is my average unit price? My average unit price is probability related sales value divided by probability related sales volume. So how much I have got as a average unit price? मुझे कितना average unit price मिला? I got the average unit price of 79 rupee 13 paisa. I got the average unit price of 79 rupee 13 paisa. Now, my dear friends, let's solve this question for first 10,000 units, right? There are buckets available. So the total probability related sales volume is 25,950 units. Okay. For first 10,000 unit, what accounting you will do? You know that when you are selling first 10,000 unit, you know that your price has to be 90 rupee, right? So means you will receive 90 rupee from the customer, 90 multiplied by 10,000 units, which is 9 lakh rupee. But you will recognize the revenue at the average unit price, which is 79 rupee 13 paisa. So 10,000 unit multiplied by 79.13. Okay. So you receive 9 lakh rupee. You recorded a revenue of 7,91,000 rupee. So the remaining amount will go to liability towards customer balancing figure. Balancing figure is your liability towards customer, right? Tomorrow, if the customer will achieve the higher bracket, you have to refund. Okay. So 1,08,700 will be your liability towards customer, being revenue recognized on the sale of first 10,000. Now, my probability related sales volume, I have a probability that I will be able to sell only 25,950 units, for example. So for next 15,950 unit, what will be the price? So now the moment I cross 10,000 unit, now the applicable price is 80 rupee for the entire 25,950 units, right? So now what I'll do, I will recover the money. I will recover the money on 25,950 units, right? So 25,950 units multiply by 80 rupee. So what is my entitlement? I have to receive the total money from the customer at the rate of 80 on 25,950 unit of goods, right? Minus 9 lakh rupee I have already received, that I will adjust. So I have recovered bank account debit 11 lakh 76,000. Now I will recognize the revenue at 79 rupee 13 paisa, right? 79 rupee 13 paisa, which is how much? How much I will recognize the revenue? 15,950 multiply by 15,950 multiply by 79 rupee 13 paisa, right? 79 rupee 13 paisa. So now my credit is more, my debit is less. So I will debit my liability towards customer, right? I will debit my liability towards customer, balancing figure, right? Now if you will see, now I will reverse this liability. Right? I will reverse this liability. So friends, what is my liability towards customer? 1,08,700 minus 86,124, 22,577. So I will debit my liability 22,577. I will credit my revenue 22,577. Sir, what is this amount? If you see, we have recognized the revenue at 79 rupee 13 paisa. Okay. So we have recognized the revenue at 79 rupee 13 paisa. Okay. We recognize the revenue at 79 rupee 13 paisa. But as per the slab of this 10,000 to 35,000, what is the applicable price? The applicable price is 80 rupee. The applicable price is 80 rupee, na? Right? So let's say I had to recognize a revenue at 80 rupee, but I had recognized a revenue at 79 rupee 13 paisa. So what is the difference between 80 minus, what is the difference between 80 minus 79.13? 87 paisa. If I will multiply this 87 paisa in my 25,950 units, I am getting 22,577. This is the differential revenue which I need to recognize, and this is the liability towards customer which I need to reverse. Okay. Is that clear? If I talk about my total number in the financial statement, friends, tell me how much money I should receive for selling 25,950 units. 25,950 multiply by 80, right? And let's see how much revenue I have recognized. This plus 22,577, right? 20 lakh 76,000. This is the amount of revenue which I have recognized in the financial statement. Is that clear, my dear friends? I hope it is clear to all of you. Yes. Now coming to the most likely method, or alternatively what we can do, if you can see, in the first place, you will bank account debit 10,000 multiplied by 90. You will credit revenue at 79 rupee 13 paisa. This is liability towards customer. Now what you can do, your bank account debit is what? 25,950 multiplied by 80 minus 9 lakh, right? Revenue has to be recognized at 80, let's say. Total amount 25,950 multiplied by 80 minus whatever value you have recognized earlier as a revenue. The differential you will find as a liability towards customer. This has been debited. This is what you can also pass as an entry. Coming to the most likely method, the expected sales unit is 28,000. The applicable price is 80, right? So what you will do? You will get the money in the bank at 90 rupee for the first 10,000 unit, right? 10,000 multiplied by 90. To revenue, you will recognize at 80 because you are estimating that I will be able to sell 28,000 units. To revenue 80. To liability towards customer 1 lakh. Now for 18,000 units, what you will do? Simple. 28,000 unit multiply by 80 rupee minus whatever money you have already recovered, right? Then to revenue is of course 28,000 unit multiply by 80 minus the revenue you have already recognized 14 lakh 40, and the differential is liability towards customer, which is debited. As simple as that. Friends, I hope this is clear to everyone. If you see, this is the solution of this question, right? Probability related sales volume, probability related sales value, 79 rupee 13 paisa, right? So this is how it is going to be recognized. Okay, these are the journal entries which I have already shown you. Okay. Yeah. Is that clear? Is that clear, my dear friends? I hope it is clear to everyone. Yes. Question number 7. Again, one of the concept of transaction price is finance component, right? Finance income in addition to revenue. Let's discuss this question number 7. Let's discuss this question number 7, my dear friends. Okay. Shall we discuss this question? Yeah. Question number 7. Shall we do it? Okay. Yes. A Limited is a company which is in the business of manufacturing engineering machines and providing after sales services. So first they are selling machine and they are also providing after sales services. Okay. The company entered into a contract with Mr. Anik to supply and install a machine. The company entered into a contract with Mr. Anik to supply and install a machine, namely Model Pi, on 1st April 2018 and to service this machine on 30th September 2018 and 1st April 2019. The cost of machine is the cost of manufacturing the machine to A Limited was 1,60,000. Okay, so what information is given in the first paragraph? In the first paragraph, first information is this company is in the business of manufacturing and selling machine, and this company is in the business of after sales services. This company entered into a contract with Mr. Anik, who is a customer, to supply and install a machine, namely Model Pi, on 1st April 18. On 1st April 18, this machine is getting supplied, and to service this machine and the after sale service will happen on 30th September, 1st April. Okay. And there is a cost which is given for the machine, 1,60,000. And the cost of the machine which is given is 1,60,000. It is possible for a customer to purchase both the machine and the maintenance service separately. So this line indicate these are the distinct service, right? A customer, these services, these goods and services are distinct at its own and in the context of contract also. So the customer can purchase both the machine and maintenance service separately. So for example, the customer will purchase the machine now and the customer can purchase the maintenance service later on as well. Mr. Anik, customer, is contractually obliged to pay A Limited 4 lakh rupee on 1st April 2019. Okay. Mr. A is contractually obliged to pay, Mr. Anik is contractually obliged to pay A 4 lakh on 1st April 19. 1st April 19. Okay. So machine was supplied on 1st April 18. Maintenance is happening, the first maintenance is happening on the 30th September 18. But the payment has to happen on 1st April 19, means after 1 year from the purchase of the machine. Okay. The prevailing rate for 1 year credit, the prevailing rate for 1 year credit granted to trade customer in the industry is 5% per 6 month period. 5% per 6 month period. And what is the prevailing rate for 1 year credit? It is 5% per 6 month period. It is 5% half yearly. It is what? It is 5% half yearly, right? So how much annually? If it is 5% half yearly, how much annually? 10%. So, acha, question में the dates which are given, it is also 1st April 18, 30th September 18, 1st April 19. Okay. Okay. As per the experience, as per the experience, the servicing of the machine sold to Mr. Anik is expected to cost A Limited 30,000 to perform the first service and 50,000 to perform the second service. Assume actual cost equals expected cost. So cost is also given. See, the cost of machine is given in this question, which is 1,60,000 rupees. The cost of first maintenance service is given, which is 30,000 rupees. The cost of another maintenance service is given, which is 50,000 rupees. So you remember the cost of the first performance obligation, which is machine, that is given. The cost of another performance obligation, first service is given. The another performance the third performance obligation, second service cost is also given. So cost is given and the amount is given only for the contract which is 4 lakh rupee. This customer has to pay 4 lakh rupee for this entire arrangement. And this customer is paying after 1 year, that is given, and 5% rate of interest is given on a half yearly basis. So far we got these information. Okay. When A Limited provides machine service to customers in a separate transaction, it earns a margin of 50% on cost. When A Limited provides machine services to customer in a separate transaction, it earns a margin of 50% on cost. So when this A Limited is providing us services separately to the other customer, whatever cost it is getting, the A Limited is earning a margin of 50%. For example, if 30,000 is the cost of first service, how much is the standalone selling price of the first service? The revenue portion is 45,000. 30,000 plus 50% of 30,000. For the second service, cost is 50,000. And normally going by the cost plus margin approach, remember, if you have to find in a contract, if you have to estimate the standalone selling price, there were three approaches: AMMA approach, adjusted market assessment approach, cost plus margin approach, residual approach. So if the question will give you the cost and question will give you the margin, can you find out the standalone selling price? Yes. So here the cost is given 30,000 and 50,000. The margin is 50%. So for the first service, the standalone selling price is 45,000. For the second service, the standalone selling price is 75,000, which is 50 plus 20. Okay. Then it is written. Just a minute. Guys, am I audible? Am I audible? Okay. Yeah. So then on 1st April 2018, the cash selling price of the machine model Pi sold to Mr. Anik is 251,927. Friends, if you see this question, it's a very simple question, but it's a very complex question also. If you know the concept, the question is very simple. So this question has given you the standalone selling price of machine, first service, second service, okay, and interest rate also. And the total value, the total transaction price is 4 lakh. The promised supply of machine model Pi and maintenance service obligation are satisfactorily carried out in time by the company. You are required to segregate the component. You are required to segregate the component of the transaction that A Limited shall apply to the revenue recognition criteria separately. Calculate the amount of revenue which A Limited must allocate to each component of the transaction. Pass journal entries, draft and extract also to be presented and disclosed in the financial statement in 19 and 20. Shall we do this question? Shall we do this question? Yes or no? करें इस क्वेश्चन को? Yeah. Shall we do this question, my dear friends? Okay, let's do this question. Let's do this question. Okay. Yeah. Friends. First of all, day 1, 1st April 2018, the vendor, the company, the seller, A Limited, has supplied the machine. The first performance obligation is completed. Right. So what is the revenue which was recognized on that day? What was the revenue which was recognized on that day? Revenue कौन सा recognize करेंगे? Which revenue we should recognize on that day, my dear friends? कौन सा revenue recognize करेंगे या नहीं करेंगे? Should we recognize? Should we not recognize the revenue? क्या करें? Recognize तो करेंगे. We have to recognize the revenue. We have to recognize the revenue at what value? At what value we should recognize the revenue? We should recognize the revenue at 251927. As simple as that. 251927. I hope this Excel is visible to everyone. 251927, right? What is the cost? 1,60,000 is the cost. 1,60,000 is the cost. And what is the accounting entry? Customer account debit to revenue. Customer account debit to revenue, right? What is the closing balance of the customer? 251927. Listen, on 1st April 18, the customer has not paid the money. Okay. Now, the time period of first service has come. So what is the cost of the first service? 30,000 rupees. The cost of the first service is 30,000 rupees. Now, what is the revenue? What is the revenue? The revenue is how much? 150% of the cost, 50% margin is there, right? So again, entry customer account debit to revenue, customer account debit to revenue, right? So cumulative balance is this plus this. Now we need to recognize interest income also. We need to recognize interest income also, na? On 30th September 18. At what value? So whatever is my receivable on 1st April 18, multiply by 5%, 12,596. What is the accounting entry? Customer account debit to interest income. What is closing balance? This plus this, right? Then again on 1st April 19, second service has come on 1st April 19. Second service has come na? On 1st April 19. Second service has come. What is the cost of the second service? 50,000 rupees. What is the revenue of the second service? Right. This multiply by 150%, 75,000. Before that, we have to recognize interest income also. Right. We have to recognize interest income also. What is the interest income on 1st April 19? Whatever was the outstanding balance on 30th September 2018, this is the outstanding balance, multiply by 5%. Right. And what is the accounting entry? Customer account debit to interest income. And here customer account debit to revenue. You can see this closing balance become 4 lakh rupee. Can you see this? This closing balance become 4 lakh rupee. Can you see this? This closing balance become 4 lakh rupee. Yeah. Are you able to see this? Now on 1st April 19, cash received, right? So cash received means cash account debit to customer account, cash account debit to customer account, right? So cash account debit to customer account, right? So customer account has to be credited. So this is how your entire, question number 7 is there. Very simple question. If you will solve in this exam in the tabular form, it will be very easy. This is the question number 7. Have you understood it or not understood it? Yeah. Question number 7. Is that clear or clear? Is it clear in mind or clear from mind? Clear in mind? Is that clear in mind or clear from mind? Is that clear in mind? Okay, very good. Very good, my dear friends. Great, guys, great. Yes, absolutely fine. Yeah. Okay, okay. Now let's move to the next question. Okay, so this is what it is given. We pass journal entries also. Journal entries, I have told you, like for customer to revenue, I told you, but for the cost, it is cost to inventory. As simple as that. Right. Okay. Clear? Now, friends, question number 8, very important question. And this question came in exam also, right? So loyalty. This is one of the practical area and important area in the world of revenue recognition. Day before yesterday, I visited Bikaner Wala, right? You must have heard about Bikaner Wala, Haldiram Bikaner Wala. It's a retail chain restaurant. Bikaner Wala is a retail chain restaurant. Okay. So it's a restaurant, Bikaner Wala. Okay. So I bought 5 samosa and 5 rasgulla. मैंने 5 समोसे 5 रसगुल्ले खरीदे. And the total bill was around 200 rupees. And you know, I got 10 reward points. I got 10 reward points. Okay. So even when you purchase sweets and snacks, you are also getting some reward points, right? The story of reward point began from the airlines. Began from the airlines, okay? Where when you are buying a ticket from an airline company, you have to pay the price of the ticket, and that airline company is also giving you some loyalty points. If you have traveled from Air India, so they have a Maharaja Club. They has a Maharaja Club program, Maharaja Club loyalty points. If you have flown from Indigo, they have blue chip program, and they call it as a blue chip loyalty point, right? So blue chip loyalty point, Maharaja Club loyalty point, okay? This is what they have. This is what they have, okay? So friends, if I talk about this loyalty point, what is the loyalty point? What are the reward points, right? For example, you bought a ticket from Delhi to Mumbai from Indigo Airlines, for example. You paid 10,000 rupees to Indigo Airlines, and you got a right to travel from Delhi to Mumbai on a specified date, right? In a economy class on a specified date, okay, via flight. Now, let's say Indigo is giving you 1000 loyalty points on purchase of 10,000 rupee of ticket. And you will redeem these reward points, these loyalty points in your future travel, right? In your future travel. So now you bought the Delhi Mumbai ticket, you paid 10,000 rupees, and now you kind of flown, okay? Kind of flown, and you have 1000 reward point also. It was credited in your account. After 1 month, you want to travel to Chandigarh, Delhi to Chandigarh, and you were just scrolling you were thinking that you should go by the car or train or flight. You are looking at the flight ticket and you found that the flight is coming at 950 rupee only, or let's say 1000 rupees only. You remember, you remember, oh, you thought I have 1000 reward point. Let me use this 1000 reward point and let me get the ticket from Delhi to Chandigarh booked through the reward point. So friends, what you do? You use your loyalty point, reward point in booking a ticket from Delhi to Chandigarh for 1000 rupees. Tell me, you use your reward point. Are you liable to pay any amount? Because the price of the ticket was 1000 rupees and you use your reward point. So no, you are not required to pay anything. So tell me one thing, by paying 10,000 rupees for the ticket from Delhi to Mumbai, you got a right to fly on the two routes, Delhi to Mumbai route for which you have paid and Delhi to Chandigarh route also. So as a Indigo's customer, you are boarding Delhi to Mumbai flight and Delhi to Chandigarh flight at two different time frame, but you have paid only 10,000 rupees. So don't you think Indigo as a company, right, or any company who is giving a reward point which can be utilized in future purchases, don't you think there are two performance obligation? Performance obligation number one, ticket of Delhi to Mumbai. Performance obligation number two, providing a right to fly in the other routes, right? So providing a right to redeem against future purchases, right? Providing a right to redeem against future purchases. Okay. Is that clear? Is that clear, my dear friends? Is it clear or not clear? Is it clear or not clear, my dear friends? I hope it is clear. Yes. Yeah. Yep. Okay. So what is the concept here? The concept here is, when you are collecting, Indigo is collecting 10,000 rupees and Indigo is giving 1000 reward point. Indigo will not recognize the entire revenue of 10,000 rupees upfront. Why? Because this 10,000 rupees has been collected for two performance obligation. Performance obligation number one, providing a right to fly for Delhi to Mumbai and providing a right to fly against future purchases, right? So this 10,000 has to be allocated into two parts. Okay. So now let's solve this question, and with the help of this question, we will understand the concept of the different performance obligation accounting, reward point accounting. Okay. Yes. Big Deal Limited is a marketing company having its departmental stores in A-class city of India. The company sells the diversified products. For the purpose of increasing sales and attract customers, the company during the financial year 23-24 has adopted the following policy. For every purchase of 400 rupees, the customer is awarded with 6 points. For every purchase of 400 rupees, the customer will get 6 points. Okay. For every 400, 6 points. So for 1000 rupees, how many points? How many points? 1000. So 6 divided by 400 multiplied by 1000, right? Each point is redeemable. Each point is redeemable on any future purchases of company's same departmental store situated in any of A-class city within 3 years, that is up to 31st March 2026. So whatever reward point is there, it can be redeemable up to 31st March 2026. Okay. Value of each reward point is 60 paisa. The fair value of reward point is given. For example, if you have 1000 reward points, you will get a purchases of 600 rupee. Okay. Now, during the year, in the first year, the company assessed that the sales of the company during the year 23-24 is 150 lakhs, 150 lakhs, 1.5 crore. 1.5 crore, right? 1.5 crore rupees. So 1.5 crore. If 1.5 crore is sales, how much is the reward point? If 1.5 crore is sales, how much is the reward point? As simple as that. 6 point divide by 400 rupee multiply by 150 lakhs, right? This will give you how much reward point? कितने रिवार्ड पॉइंट आपको मिलेंगे इससे? This will give you how much reward point? This will give you a reward point of 2,25,000 reward point. This will give you 2,25,000 reward points. If you see here, if you will see points earned on 150 lakh at the rate 6 point on every 400. So 150 lakh, okay, 1 crore 50 lakh divide by 400 multiply by 6, 2,25,000 reward points. Estimated that out of the reward points, 54,000 points will remain unredeemed as at 31st March 24, which shall be eligible for redemption up to 31st March 26. So out of 2,25,000 reward points, how many reward points have been redeemed? 2,25,000 minus 54,000. And what is the outstanding balance? How much is unredeemed? 54,000 reward point will be considered as a liability. It is unredeemed, okay? And which can be redeemed up to 31st March 2026. Expects only 75% points will be redeemed in future. Expect only 75% points will be redeemed in the future. Friends, out of 2,25,000 points, only 54,000 points are unredeemed, are outstanding. The remaining have been redeemed. So out of 54,000 points, they are expecting only 75% point will be redeemed in future. Means 25% point will be lapsed, right? As an accountant of the company, you are required to suggest the accounting treatment in the following case. How should the sales and redemption transaction be recognized and recorded as independent transactions in the financial year 23-24, right? In the financial year 23-24, okay? In the financial year 23-24, okay? Right? So you have to solve this question that how this accounting has to happen in the financial year 23-24 as per Ind AS 115. You have to solve this question, okay? My dear friends, for solving this question, let's go into the Excel file so that you will be able to see the formula properly, okay? What is my sales value? If you see the Excel file, what is my sales value? My sales value is 1 crore 50 lakh rupee. This is my sales value. This is my sales value 1 crore 50 lakh rupee. Okay. My performance obligation 1 and 2. I have two performance obligation, current sales and future sales. So I have two performance obligation. I have to provide a service of 1 crore 50 lakh rupee and I have to provide a service of what? 126900. What is this? 1269, 2,25,000. Reward point multiply by 60 paisa. Multiply by 75%. Sorry. Just a minute. So basically, okay. Yes. Yeah. So yeah, let me show you the calculation of this. Let me show you the calculations. So when I'm recognizing a revenue, let's say at the end of the year. So I have two things. Number one, my total reward points are 2,25,000. Out of this 2,25,000, how much is the outstanding reward point? How much is the outstanding reward point at the end of the at the end of the year? Outstanding reward point 54,000. 54,000. Okay. So how much is utilized? 1,71,000. Okay. So out of this 54,000, it is estimated that only 75% will be redeemed. Okay. And 171 is already redeemed. So this multiply by 60 paisa. And this multiply by 60 paisa. This will give you 126,900. Okay. 126,900. So what is my total? What is my total? My total. What is my total standalone selling price? What is my total standalone selling price of the performance obligation? Current sales 1 crore 50 lakh. Future sales means right to claim in future 126,900. 15126,900. Okay. Now friends, I have to allocate. I have to allocate this 1 crore 50 lakh into the two performance obligation. How I'll allocate? 1 crore 50 lakh multiply by this, divide by this. Okay. Divide by this. Then this multiply by this, divide by this. Okay. So this is what I got the standalone selling price of both the performance obligation. Now, first entry I need to pass. What is the first entry I need to pass? First entry I need to pass bank account debit, 1 crore 50 lakh to revenue to reward point liability. Okay. So credit revenue, credit reward point liability. This is the first entry I'll pass. Now moving further. What is my reward point already redeemed plus expected to be redeemed? How much is my reward point already redeemed plus expected to be redeemed? This one. Your 40,500, which is 75% of 54,000 plus 1,71,000, right? 2,11,500. Sir, ये 2,11,500 कैसे आया? 2,25,000 was total. Outstanding was 54,000, means 1,71,000. Or let's do this. 1,71,000 is already redeemed. 54,000 multiplied by 75%. 2,11,500. Now, what is the value of this 2,11,500 reward points? The revenue portion. See, 126,900 क्या था? वो स्टैंडअलोन सेलिंग प्राइस था. लेकिन ये जो 2,11,500, 2,11,500 रिवार्ड पॉइंट, इसकी वैल्यू क्या है? Its value is 125,835. 125,835. Okay. 125,835. Okay. Total value. So what is the value of 1,71,000 reward point? What is the value of 1,71,000 reward point? कितनी वैल्यू होगी 1,71,000 reward point? So 125,835 is the value of 211,500 reward point multiplied by 1,71,000 reward points. So 101,739 is the value of the 1,71,000 reward point. Okay. 101,739 is the value of 1,71,000 reward point. Is that clear? Is that clear to all of you? Yeah. I hope it is clear to all of you. Yes. Now, my dear friends, I have to pass another accounting entry. Right. So I have created a reward point liability now. So now reward point liability account debit. Reward point liability account debit by what amount? By what amount? Let's hang on. To revenue. To revenue credit. Right. 101,739, and this, with this amount your reward point liability will be debited. Now you have remaining reward point liability of how much amount? 24,096, right? So how much revenue will recognize in 23-24? Revenue from first performance obligation complete, from second this. So you have recognized a revenue of 149,759,004. So the balance revenue of how much? The balance revenue of you collected how much? You collected 150. You collected 150 minus, you collected 150, but you recognize a revenue of 149,75904. So this balance revenue of 24,000 has to be recognized in future. And what is this 24,000 revenue? This is reward point liability. If you see, you have recorded a reward point liability of 125. You have already debited 101. 24,096 is a reward point liability. This is how you have to solve this question, my dear friends. I hope it is completely clear to all of you. It is completely clear to all of you. Is that clear? Not clear? Tell me. Yes. So few students have just given me a WhatsApp message. Sir, can you quickly cover? Can you quickly cover this non-cash consideration payable to a customer? Okay. Okay. So let me cover the non-cash consideration payable to a customer quickly, right? So friends, in this, if you see this complex question, if you see this complex question, word file, what we have covered today. So we have covered today the question number 2 we have covered, which is on the right to return, right? Question number 2 we have covered on the right to return. We have also covered question number 4. 3 was simple. Question number 4 on bill and hold arrangements. We have covered question number 5 on service concession arrangements. We have covered question number 7 on finance component. We have covered question number 8 on loyalty points, right? This is what we have covered today. I hope it is clear to all of you, my dear friends. Is that clear? Okay, now on the request of 2 students, let me quickly cover non-cash consideration payable to a customer. Okay, just a minute. Let me open my detail file. So friends, this concept is under the, I hope my Excel file is visible to everyone. Friend, this concept is in the third step, which is determine the transaction price. And what is this concept? Let me talk about this concept of non-cash consideration payable to a customer. Okay. So it is non-cash, or it is a consideration payable to a customer. Basically, they want to understand consideration payable to a customer. Friends, if the consideration payable to a customer results in, as I told you, no distinct goods and services, the amount payable should be reduced from the revenue or transaction price. Let me give you an example for this. Let me give you an example for this. Okay. What is the example for this? Let me tell you. So I am providing a coaching services. And the student who has asked this question, let me take the name of that student, Rahul. So Rahul is my customer. I am the entity. I am the service provider. I am the revenue recognizer. I am charging 10,000 rupees from Rahul. Rahul paid me 10,000 rupees. So Rahul came for the first class and I have just given him 1,000 rupees in an envelope, in a lifafa. So when Rahul came, मैंने उसका सगन कर दिया, right? So I gave 1,000 rupees to Rahul. Now, Rahul has not given me anything, right? He is my student. Like other student, he is coming, he is sitting, he is studying and he is going. So 10,000 rupees I have collected from my customer, 1,000 rupees consideration I have paid to my customer. And this customer is not giving me any goods and services. No. So in this case, if there is no distinct goods and services, it is just like I'm giving a post facto discount to Rahul, to my customer. So in that case, my transaction price is 10,000 rupees minus I have to reduce this consideration payable to a customer, and my net revenue, my net transaction price will be 9,000 rupees. Okay. If there is no distinct goods and services, the amount payable should be reduced from the revenue or the transaction price. My net revenue is 9,000 rupees. For example, there is a distinct goods or services. Now, again, same example. I have collected 10,000 rupees from Rahul. So Rahul has a stationery shop. Rahul's parents has a stationery shop. Okay. So I told Rahul, can you please get me some Parker pen and some notebooks, which is totaling to 1,000 rupees. So Rahul said, okay, sir. So when Rahul came in the first class, he brought some notebook and the pens for 1,000 rupees. I paid him 1,000 rupees. Friends, tell me, in this case, I am paying 1,000 rupees to my customer who is a Rahul, and he is giving me some distinct goods and services. I am giving him a coaching services, right? FR services, and he is giving me stationery. So the consideration payable to a customer is on account of distinct goods and services. In this case, I will recognize my revenue at 10,000 rupees and I'll recognize my cost expense of stationery as 1,000 rupees. So if the consideration payable to a customer results in distinct goods and services, the gross revenue and gross cost needs to be recognized separately. Now, there could be a situation where consideration payable to a customer, I am paying amount to Rahul, is equal to or less than the fair value. For example, Rahul has brought stationery worth 1,000 rupees and Rahul has given me the stationery and I have given him 1,000 rupees, which is cost equivalent to the value of the asset. Consideration payable to a customer is equal to the fair value of the asset or fair value of the distinct goods and services. So that is equal. So I paid 1,000 rupees. Second example, I paid 1,000 rupees to Rahul and Rahul told, sir, you are my teacher. So my father has given you some discount. Don't pay me 1,000 rupees, pay me 950 rupees. I paid 950 rupees, which is less than the fair value of the goods and services. So here I am paying either equal to or less than the fair value of the goods and services. So in this case, my dear friends, in this case, it will be considered as, cost, right? And cost needs to be recognized. Other example, Rahul has brought 1,000 rupees stationery for me. Instead of paying him 1,000, I paid him 1,500 rupees. Tell me, I am paying a consideration to a customer which is more than the fair value of the goods and services he has given me. So what does it mean? 1,000 tak to theek hai, but I am paying him additional 500 rupees. What is the benefit of additional 500 rupees? क्या होगा? This additional 500 rupees, it means I am giving him a discount in my coaching services, right? So the excess 500 rupee, right, has to be reduced from the transaction price. So I will recognize my revenue for 10,000 minus 500, 9,500 and cost to the extent of fair value, which is 1,000 rupees. This is what the concept of non-cash, concept of consideration payable to a customer is there, right? This is the concept. Okay. This is the concept. Is that clear? This is exactly what case 1 and case 2, which is there, my dear friends. Okay. Yeah. I hope it is clear to all of you. Yes. If you want this Excel file, you can write on the board of studies of ICAI or cacsalogarg@gmail.com. Okay. Yes. So my dear friend, this is the concept of non-cash consideration. Quickly, let me capture this also, because might be if the student is asking about non-cash consideration. Consideration other than in the form of cash, like barter transaction. Transaction price kya hoga? What will be the transaction price in case of non-cash consideration? The first preference is fair value, as I have already mentioned in the beginning. Fair value oblique standalone selling price of the goods received. If it is not identifiable, then fair value of the goods transferred. For example, DLF. DLF sells flat to Mercedes in exchange of 2 cars. So DLF Limited's ordinary course of business is to sell flat, and Mercedes ordinary course of business is to sell car. The fair value of one Mercedes car is rupees 2 crore. So DLF is selling flat and getting 2 cars, right? So what is the fair value of Mercedes car? 2 crores. At what value DLF will recognize revenue in the books of accounts? Explain with the help of accounting entry what is the transaction price. So in this case, not cash account debit, car account debit. At what value? Value of the flat or value of the car which is coming? Value of the car which is coming. Value of the consideration which is coming. So car account debit 4 crore, 2 multiplied by 2, 2 revenue 4 crore. Being revenue recognized at the value of goods received. Okay, at the value of goods received. Is that clear? Is that clear? Yeah. I hope it is clear to all of you. Right? Okay. So friends, again to summarize, and the key to success is to do more and more and more and more practice. Okay. Practice makes you perfect. The key point I want to highlight in this standard revenue from contract with the customer, that first of all, you are not required to remember the paragraph number. No, you are not required to remember the paragraph number. That is very much clear. Okay, not required at all. You know the concept. You should remember the concept. The concept has to be very clearly known to you. The concept. Okay, that is one. The concept has to be very clear to you. This 5-step model, this is the heart of Ind AS 115, and this has to be entered in your heart also, right? 5-step model. Okay. Identify the contract with the customer, determine the performance obligation. Okay. Or identify the performance obligation, then determine the transaction price, then allocate the transaction price into the standalone selling price of the performance obligation, and recognize revenue at a point in time or over a period of time. I would advise you, this standard is very lengthy and every step has multiple concepts. I would advise you, before revising this standard, first of all, put the concept pointers on your piece of paper. For example, when you are discussing the identify the contract with the customer, what is the key point here? For example, the collection will be probable, right? कॉन्ट्रैक्ट तो ठीक है, ओरल रिटर्न होना चाहिए, एक्सप्लिसिट इंप्लाइड होना चाहिए, कमर्शियल सब्सटेंस होना चाहिए, दैट इज ओके, दैट इज थ्योरी, राइट? व्हेन यू कम टू द कॉन्सेप्ट नंबर 2, परफॉर्मेंस ऑब्लिगेशन, like what is meant by distinct goods and services, when you will say that goods and services are distinct, it has to be distinct at its own, and it has to be distinct in the context of the contract also. In the context of the contract means highly, so basically if it is highly integrated, highly modified, highly customized, then you cannot say that goods and services are distinct in the context of the contract. It is not distinct. Okay, so there are small concepts lying within those steps. When you get into the transaction price, variable consideration, under variable consideration, expected value method, most likely method, right? Significant financing component, non-cash consideration, consideration payable to a customer. In the allocation of transaction price part, you have 3 method to estimate a standalone selling price, which is adjusted market assessment method, cost plus margin method, residual method. When you go to the recognized revenue at a point in time or over a period of time, you have again 3 criteria. When those 3 criteria will be, any of the criteria will be satisfied, it is revenue recognition over a period of time. If not, at a point in time. Then you have a specific point like bill and hold arrangement, repurchase agreement, right? Service concession arrangements. Okay. So these are the specific criteria. So if you will have a control on the topic, then you will be able to have a control on the concepts also. And if you have a control on the concepts, it will be very easy for you to solve in the exam, right? This is my key input to all of you, my dear friends, right? And of course, the standard is lengthy, but very interesting. Those who are directly jumped into the revisionary class, I would request all of you to please go to the detailed classes on Ind AS 115. Those are very detailed class. Lot of layman language example were captured. Lot of questions from study material was captured, right? And then you will be able to understand the beauty of the revision. Thank you so much, my dear friends. Thank you so much. And I hope you have enjoyed the session. So thank you so much. Yeah. Yeah, session is over. Yes. Thank you.